The man about to be confirmed as the next chairman of the Federal Reserve owns somewhere between $135 and $226 million in personal assets, and a substantial portion of that is in cryptocurrency. Solana, Polymarket, Compound, DYDX, Polychain Capital, and a direct stake in the company that issues a spot Bitcoin ETF. Every single chairman of the Federal Reserve before him was either openly hostile to digital assets or had no exposure to them whatsoever. Kevin Warsh changes that. He's the first chairman in the Federal Reserve's 113-year history whose personal balance sheet is directly tied to the performance of the asset class his policy decisions are about to move. And this creates a very interesting dynamic. My name is DC and you're watching The Coin Bureau. Let's start with what the actual paperwork says, because this story does not require speculation. It requires a 69-page financial disclosure document filed in April 2026 with the Office of Government Ethics. Inside that filing, Warsh disclosed more than 30 individual crypto-related investment positions. Stakes in Compound, the DeFi lending protocol, stakes in DYDX, the decentralized derivatives exchange, direct exposure to Solana, equity in Polymarket, the prediction market platform, allocations to Polychain Capital, one of the largest crypto-native funds in the world, exposure to Optimism and Blast, both Ethereum Layer 2 networks, and Flashnet, a Bitcoin Lightning Network startup, and critically, an ownership stake in Bitwise Asset Management. Bitwise is the company that runs the spot Bitcoin ETF trading under the ticker BITB. Now compare that to every single one of his predecessors. Paul Volcker, the man who broke the back of inflation in the 1980s, served as Fed chair with an estimated personal net worth of around $1 to $2 million, held almost entirely in government bonds and cash. Alan Greenspan, the longest-serving chair in modern history, held treasury notes and conservative consulting income. Ben Bernanke walked into the 2008 financial crisis with a TIA-CREF retirement account and a couple of mutual funds. Janet Yellen diversified index funds and treasury securities. Jeremy Powell, the wealthiest chair in history before this moment, held somewhere between $19 and $55 million, almost entirely in index funds, municipal bonds, and real estate. Powell, on the record, said this exact line: "We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change." That was the standard, and now Warsh shattered it. For the first time in the Fed's 113-year-old history, monetary policy will be set by someone whose personal wealth chart looks more like a Bitcoin chart than a treasury chart. And the wealth gap is not even close. Volcker's roughly 2 million, Powell's roughly 35 million median, Warsh's range starts at 131 million and reaches as high as 226 million on individual disclosures. His wife, Jane Lauder, an heiress to Estee Lauder fortune, has an estimated personal net worth of approximately $1.9 billion on top of that. This is a different kind of financial universe. Now here's where it gets interesting, because the rhetoric and the reality are pointing in two different directions. At his confirmation hearing on April 21st, 2026, Warsh said the following on record: "Digital assets are already part of the fabric of our financial services industry." He advocated for clear regulatory frameworks differentiating commodities from securities. He pushed back against what he called enforcement-first regulation. He told the committee, and I'm quoting directly, "I will be independent. I will be honest. I will be direct. I am no sock puppet." He also committed to selling every single one of his crypto-related holdings before his expected start date of May 15th, 2026 to comply with Federal Reserve ethics rules. So on paper, the conflict gets resolved. And of course, we should absolutely trust that personal exposure of this magnitude accumulated over years of active engagement with the entire DeFi stack will simply evaporate the moment a divestiture certificate is signed, because that always works out perfectly. But here's the thing, the divestiture does not erase. It does not erase familiarity. It does not erase conviction. It does not erase 20 years of intellectual engagement with this technology. And it certainly does not erase the fact that his largest single position, valued at over $50 million, is held inside the Juggernaut Fund LP, the Druckenmiller family office vehicle which uses confidentiality agreements that shield the underlying holdings from public view entirely. Senator Elizabeth Warren flagged exactly that point at the confirmation hearing. The blind trust framework requires public officials to disclose what they own. It does not require the underlying funds they own to disclose what they own. That is the entire loophole. But the conflict of interest question, while real, is not actually the most important angle here. The most important angle is what this means for the next 4 years of monetary policy. Because you do not need to speculate about Kevin Warsh's monetary policy views. He has written them down for 20 years. He served as a Fed governor from 2006 to 2011. In June 2010, at an FOMC meeting whose transcript is publicly available, he said this: "In terms of the other policy considerations about diminishing returns of the QE regime, I would say we are past the point of diminishing returns." In November 2010, on the QE2 vote, he said this: "If I were in your chair, I would not be leading the committee in this direction. And frankly, if I were in the chair of most people around this room, I would dissent." He resigned from the Fed in March 2011 over balance sheet expansion he refused to support. He has called quantitative easing reverse Robin Hood. He has called the current $6.7 trillion Fed balance sheet bloated. He has demanded what he calls regime change at the Federal Reserve. So this is, on the macro side, a genuine hawk. Now here's the paradox that should have every holder paying attention. The man personally invested across 30 crypto positions is the same man whose monetary policy philosophy is the most aggressively tight money posture we've seen on a Fed share shortlist in over a decade. The current Fed funds rate sits at 3.64%. CME FedWatch is now pricing a roughly 84 to 95% probability that rates stay on hold through the end of 2026. There is now a non-trivial probability of a rate hike in early 2027. Warsh's documented policy preference is shrinking the balance sheet aggressively while potentially cutting short rates to offset what analysts at ABN AMRO have described as the QT for cuts trade. That is a financially neutral mix on paper. In practice, it would push long and treasury yields higher while easing the short end. The 10-year is already at 4.45%. Bitcoin's relationship with that rate since the launch of the spot ETFs has become extraordinarily direct. BlackRock's IBIT alone now holds $63.5 billion in assets and over 806,000 Bitcoin, which is roughly 3.8% of all Bitcoin that will ever exist. The full spot ETF complex sits near $89 billion in assets. That money flows in and out based on real rate expectations, and real rate expectations are about to be set by Kevin Warsh. So here's the strategic picture for anyone holding Bitcoin or anything else in this space. There are 2 ways to read this transition, and both readings are honest. The bull reading is that for the first time in history, monetary policy will be set by someone who genuinely understands the asset class, who has personally allocated to its infrastructure, who pushed back against enforcement-first regulation in his confirmation hearing, and who frames Bitcoin as, in his own words, the new gold for anyone under 40. That is structural legitimization that simply did not exist under any prior chair. Future Fed appointments will now likely require some baseline level of digital asset literacy. That is a one-way door. The bear reading and the honest counter case is this: personal crypto exposure does not guarantee favorable policy. In fact, it can produce the opposite outcome. A chair with known crypto holdings may overcorrect, deliberately implementing tighter policy or harsher regulatory posture to demonstrate impartiality. And on the macro side, Warsh's hawkish framework around the balance sheet, around higher real rates, around eliminating the so-called Fed put, is the exact monetary environment that historically destroys risk asset valuations. Bitcoin's worst drawdown in its history, the 77% collapse in 2022, happened during the most aggressive Fed tightening cycle since Volcker. Marcus Thielen at 10x Research has put this bluntly: Warsh's personal portfolio is irrelevant compared to his macro philosophy, and his macro philosophy is structurally bearish for speculative assets. Both of these readings rest on the same underlying fact. The Fed chairmanship has historically been one of the most economically powerful positions on earth, held by people with deliberately uninteresting portfolios. That was not an accident, it was the institutional design. Kevin Warsh now finally breaks this long-standing tradition and pattern, not because of anything he says about Bitcoin in a confirmation hearing, but because of what his actual financial disclosures says about where his personal capital has lived for years. The first scheduled FOMC meeting under his chairmanship is June 16th and 17th, 2026. Now that is the exact date that matters. Whether you read this as legitimization or as a serious conflict of interest that should disqualify him, the underlying fact does not change. The most important monetary policy decisions of the next 4 years will be made by someone with documented direct financial alignment, recent and substantial, to the asset class most viewers of this channel hold. That has never been true before. It is true now. And those implications take years and years to fully play out. So here's the main question worth thinking about carefully. Does a Fed chair with significant personal crypto exposure represent legitimization or a serious conflict of interest that should disqualify him from the role entirely? Please get genuinely opinionated in the comments, because this is something we've never experienced before. And if you want to understand exactly how Fed chair transitions have historically moved the Bitcoin price, going back through Yellen, Powell's first term, and Powell renomination cycles, you should definitely check out our deep dive right over here. Thank you all so much for watching, and I'll see you again very soon. This is DC, signing